Adebayo and welcome to Business Incorporated. I am BC Adebayo. We begin with a report from the World Bank saying that sub-Saharan Africa will post its first recession in 25 years, hitting the region's three biggest economies, Nigeria, South Africa and Angola, as the coronavirus pandemic disrupts global trade. In its Africa Pulse report released today, the Washington-based lender says gross domestic products in the region will probably contract 2.1% to 5.1% in 2020. Growth was 2.4% in 2019. The growth downgrade is based on risk, including a sharp decline in output in key trading partners such as China and the euro area, falling commodity prices, reduced tourism, and measures taken to contain the virus. The World Bank estimates the virus outbreak will cost sub-Saharan Africa between $37 billion and $79 billion in output losses due to disruption to trade and value chains, reduced foreign investment and aid. Meanwhile, Goldman Sachs Group has also made a similar prediction, saying that a combination of lockdowns to contain the spread of the virus and lower revenues from exports and tourism will be severe enough to trigger the region's first full-year recession since 1991. Goldman estimates Angola and Zambia may be among the hardest hit countries, with their economies shrinking by as much as 9% in 2020. South Africa's output will probably decrease by 6% and Nigeria's by 4%, while Ghana, Mozambique and Senegal will also contract if the shutdowns end up being heavy. According to the bank's economists, budget deficits would likely rise from an average of around 3.5% to high single digits even before any loosening to soften the economic effects of the corona crisis. But one saving grace, according to Goldman, is that few African sovereigns have many foreign bonds maturing this year. Well, let's hit the markets now, starting with intraday figures from Africa, where the Nigerian All-Share Index appears to be sustaining the positive momentum with a 0.14% gain at intraday. In South Africa, the JSE Index was also up 0.88% at intraday. The EGX 30 was also at 2.34% positive. Kenya was, however, down 1.33% on Wednesday. And most Gulf markets are also trading higher as investors shifted focus to an OPEC Plus meeting later today on expectations that the world's largest oil producers will agree to cut production. The Abu Dhabi index jumped 6.38%, boosted by a 7.5% surge in the UAE's largest lender, First Abu Dhabi Bank. In Dubai, the index gained 3.56%, also at intraday. The Qatari index rose 0.45%, helped by a 1.2% increase in Qatar Islamic Bank. Saudi Arabia's benchmark index was trading around the flat line at intraday. And European markets traded higher Thursday as market participants start to hope that the coronavirus pandemic is reaching a peak. But the latest U.S. unemployment claims data could hit sentiment. Well, let's get details from Conrad Busin at the Frankfurt Stock Exchange. Good afternoon, Conrad. It's good to see you again today.
Good afternoon, BC. Thanks for having me on Channels TV.
So the stock markets in Western Europe managed to climb this Thursday, which in Frankfurt is the last trading day of the week before the Easter holidays. But what's driving trading today?
Well, as you just told our viewers, the most important piece of data being expected on the financial markets today was the latest unemployment data from the United States. Remember that last week and the week before, enormously high claims for first-time unemployment benefits were recorded in the United States. And today, this Thursday, was another day where, the American Labor Office came out with the latest unemployment benefits applications. And the number again was significantly higher than anticipated. 6.6 million Americans claimed unemployment aid for the first time last week. And that means that in 3 weeks alone, 16.5 million Americans have become unemployed, have lost their jobs. And this, of course, is an indicator that the recovery of the economy in the United States is likely to last much longer after the corona shock, as America's economy is so depending on private consumption, on retail, on spending by ordinary Americans. Now, if we check out the reaction of the German DAX due to the numbers, the index has given up most of its early gains it's made in early trading, but it's still, as you see, there's no shock reaction. The two previous weeks, where also the number from the US labor market had been much worse than anticipated, sort of made people on the markets prepared today. They now also expected a bad number. That's what they got. And well, it's of course not adding positively to sentiment, but it's not causing a big slump here today.
Central banks all over the world have ramped up their efforts to keep money markets and financial systems afloat. But the US Federal Reserve predicts that interest rates near zero for a long period of time. Is that enough?
Well, you know, it's not the only thing that central banks are doing. Those very low key interest rates by the central banks are accompanied by huge asset purchases of bonds, of fixed income securities given out not only by governments, but also by corporations, corporate bonds, that is. And a large amount of those bonds are being bought by the central banks in America, in Japan, but also here in Europe by the European Central Bank. During the last 2 weeks, new corporate bonds worth 75 billion euros were issued. And that, of course, also has to do with the fact that everyone on the market knows that the central banks are the big buyer. That's, you know, what's being meant by printing money. The central banks are doing. They're buying corporate bonds that corporations, also states, but also corporations are issuing. And this mechanism invites, of course, corporations to come out even more with new bonds. The 75 billion euro issuances during the last 2 weeks, that was a new record. Among the companies coming out with new corporate bonds during the last 2 weeks are Toyota, Sanofi, also Deutsche Bahn, which is our national railway operator here in Germany, deeply in trouble at the moment because, you know, it's lacking passengers due to the corona lockdown, but the trains are running nevertheless. So a lot of money is needed. And by issuing those corporate bonds, Deutsche Bahn managed to get at least some cash.
Now let's talk about Saudi Arabia's sovereign wealth fund, which is investing in oil firms like Shell and Total. It has also bought a share in cruise line operator Carnival Cruises. What sectors are actually winners in this corona crisis?
Well, obviously, those purchases by the Saudi wealth fund indicate that there are a few bargains to be made out there, and bargain hunters like the Saudi Arabian wealth fund who benefit from the large slump that many corporations and shares of companies have seen and go out on the markets buying some of those big losers. But of course, it's more interesting to look at the sectors that really benefit from the extraordinary situation of the lockdown. And here, well, one of the gainers is Kraft Heinz, the food producer that's world famous for its Heinz ketchup and also for macaroni and cheese, a very fatty food, very popular in the United States. And obviously the reports are that it's very, very popular among Americans during that lockdown. People sitting at home, eating unhealthy food. Positive news for Kraft Heinz, which is really seeing a large sales bump. What are people doing eating that unhealthy food? They're watching television, and they're watching a lot of not only channels TV, unfortunately, BC, but they're also watching a lot of video streaming. Disney Plus has reported that it's now has 50 million subscribers worldwide, and that's an increase from 28% at the, from 28 million at the beginning of February. So that the number of subscribers in only 2 months nearly doubled. Disney, of course, since the beginning of February has started in a number of countries, including Germany. And well, the times are fantastic for video streamers. Everyone's sitting at home. There's nothing more you can do.
Well, I wonder what happens to those numbers when the lockdown is finally over. Thank you, Conrad, and please remember to stay safe. Let's turn now to the UK, where the government is set to borrow billions of pounds from its emergency Bank of England overdraft to finance the fight against COVID-19. Juliana Olayinka is ready to tell us more about this. Good afternoon, Juliana. So this is the first time that the government is having to use this fund since the financial crisis. This certainly, of course, will come with a lot of controversy. What exactly are you hearing?
Good afternoon, Bissy. Well, I'm not sure we'd describe it as controversy, but it's definitely touched the equities market, and it just shows just how serious this COVID-19 is causing the Treasury here in Britain. Now, the Ways and Means facility has been available for some time. It currently stands at about £400 million worth of overdraft, but as you said, it was used during the financial crisis in 2008, and it actually went down as low as £19.6 billion. The day-to-day running of the finances with the government are, of course, under immense strain because of all of these measures and policies that the government have put in place to stop businesses going under. The Chancellor initially put in about £350 billion. That's likely to be raised to £500 billion or even beyond that. Now, both the Treasury and the Bank of England did release a statement, and they did emphasise that this is a temporary measure, and the Chancellor is hoping that this money, however much they do withdraw, will be given back before the end of the year.
Now, you talked about the government's £750 million package to support charities with Chimmy this morning. Now, organisations are warning that this will not be enough to prevent some being forced to close. What are they suggesting that the government should do?
Well, in short, what they're suggesting is they need more money. Some charities have welcomed yesterday's £750 million package. Others haven't. These are coming mainly from the larger charities and opposition Labour parties. Britain has a whopping 160,000 charities across the country. And, of course, they've faced challenges, as other firms and businesses and individuals have, since the lockdown started 3 weeks ago. And mainly that's due to the cancellation of events, which is where they raise the most money. One example a lot of people are dishing out is the London Marathon, which is due to take place right about now. That raises about £66 million every year, and that's just one event. So this £750 million they don't think reaches far enough. A lot of charity chiefs are talking into some billions. 4 billions is what one charity chief spoke of. But the Chancellor of the Exchequer, Rishi Sunak, he said yesterday that he isn't able to save everybody in every charity. And he did say that some firms will be eligible to apply to the government's furlough scheme. And we know that some of the major charities like Oxfam and Age UK are doing so with their staff.
Now, markets are preparing to go on Easter break. Juliana, what are the intraday numbers saying, and what's the outlook after the break?
Well, as I said, the Ways and Means announcement today did shock the equities market. It did open quite well this morning, but it has lost some of those gains. But nevertheless, it's still in the green. The FTSE All Share at intraday is up by 1.34%. The FTSE 100 is up by just under 1%, and the FTSE 250 is up by 1.45%. In the currencies market, the pound is up on the US dollar by 0.46%. Down on the euro by 0.39% and up on the Japanese yen by 0.43%. We did just a couple of hours ago in the UK have some GDP figures which weren't great. It showed that month-on-month GDP fell by 0.1% and over this time last year it only had a 0.3% gain. A lot of economists are saying that even though a lot of us, including me, were discussing Boris Johnson, the Prime Minister's momentous election victory as possibly bringing some sort of bounce in the economy. But looking at those figures today, it shows that that really was just hot air, that even before all of this COVID lockdown, the British economy was really struggling. And of course, there are concerns that now that the services industry, which contributes such a large part to the GDP here, is in a frenzy, that GDP could fall as much as 20%, which of course signals going into a recession. What's the plan for next week? Well, obviously, hopefully we're hoping that there could be a reduce in the numbers of deaths in the UK, which currently stands at just over 7,000. Our Prime Minister is still in intensive care. Last night he spent a third night. I would say the hopes are, of course, is that he gets out of hospital and back in number 10. Although he won't be working, he will be resting. And we do hope that the peak of COVID-19 will be reached over this weekend. And then there will be huge discussions about when these lockdown measures can finally be relaxed.
All right, Juliana, thanks for those updates and do enjoy your Easter holiday. When we return in just a moment, we'll look at the situation in South Africa. Do stay with us.